Hey folks, Dan Frio, the rate update. Today is November 23rd, 2020. What happened to those rates today? It's going to be a short week, so you got a lot of condensed data in a couple days. What happened? Stay tuned, find out. Well, today was a good news for stocks, bad news for mortgage rates. Basically, what we should probably do is just watch what's going on with the coronavirus vaccine, because it seems like that's the biggest play in the market right now. You look at the economy, things aren't very good, as we all know. But as soon as they come out with saying, there's a cure or a vaccine, the market rallies. And then 2-3 days later, there might be a postponement. Then the market drops. And so that's what happens there. But the good thing about it all is when stocks are up, normally the bond markets are down. And that we had that today. I'm not saying that's good because that's bad for bonds. And when bond prices go down, rates go up. Let me make sense of this to you or for you. Okay, so here's the headlines we got today. Basically, it's in regards to the coronavirus or the vaccine. You can see the stock market's up over 300 points, okay? Let's just ponder through this since I got this on here. Biden is looking to bring on Yellen. She used to head the Federal Reserve. He's looking to bring her on as Treasury Secretary. I personally feel like that's a great pick. So that was headlines here, but that's not what I was covering right here. I wanted to just talk about what happened with the Dow today. So that's that part of it. So you come here basically to figure out what's mortgage rates going to do. So if you're if you're looking for a mortgage, you're a builder, you're a realtor, you're a mortgage person, you're a financial planner. These are all things that you should know, I guess is a good way to put it, or things that you should follow. What I follow here on this channel is the biggest piece of the puzzle I follow is this number right here. This is what's happening to the mortgage-backed securities market. This is the biggest piece of the puzzle when it comes to mortgage rates. Okay, so I follow this number here, but this number is affected by what's going on in other markets, such as the stock market, international news, what's going on with GDP, what's going on with, and I'll go through the economic calendar. This is another thing that we watch on a daily basis. What's going on with the Treasury auctions, what's going on with home prices, what's going on with inflation measures. All this stuff is things that I monitor on a day-to-day basis because you have a full-time job. Even if you're a realtor, should you know these things? Absolutely, you should know these things so you can advise your clients, a good time to maybe apply for a loan or lock in. You probably have a lot of your prior clients calling you saying, is it maybe a good time to refinance? You bet it's a good time, but be careful. I always I always tell you guys, don't be wowed over the rate. Make sure you follow or at least follow through in reviewing your fees. And I'm going to beat that to death because after I go through rates, I'm going to show you a client that I spoke with Friday and again today. She was promised one spectacular deal because the rate was 0.5% lower than mine. But then it came back miraculously. They were charging her $12,000 to get that rate. Well, the differential in her payment is $60. It would take virtually an eternity to pay back the differential. So yes, the rate is lower. Yes, your payment is $60 cheaper. But you'd almost never get to a break-even point, okay? So that's that. But let's go over what happened today. So mortgage-backed security prices, this is what happened to the price of the bond, was down 8 ticks. What that means is, and I go through this all the time, when the price of the bond goes down, that means rates go up. Okay, there's an inverse relationship. When that number is red, rates go up. When that number is green, rates come down. Okay, that's the easiest way for me to explain that for you. There's an inverse relationship between price and yield. All right, so here's what's going on with the price, again, the price of the mortgage-backed securities market. There's really nothing going on other than we had this little blip in the radar right here. The things that have taken place during this time duration was the election, the coronavirus spike, and then coronavirus vaccine proposals or hopes of a vaccine. That's why you have a choppiness going on right here. But normally, rates, if you could see it, rates are pretty darn stable thanks to the Fed. Okay, this is where they should really technically be in a technical scenario of this thing, because really nothing's coming out that really should affect this in a very, very positive way or a very, very negative way. Okay, so again, I watch this every day to see where we are. All right, I'm going to drill down a little bit in here for the techies. You can see that there's been a run up in the market. Okay, but we're going to go through some technicals here, and let me get rid of the 200-day moving average. This is basically everything that's happened to the last quarter, all right? And then we're going to break it down to 100-day, 50-day, and 25-day moving average. So if you take all the numbers over the last 25 days, where this number is, you're going to come up with this brown line right here. And you can see the brown line right there, okay? Over the last 50 days, it's a black line, and that black line is right here. Basically where these are intersecting right here. 100-day moving average is all the way down here, okay? So the Federal Reserve their biggest goal right now has been trying to stabilize this market as well as the other bond markets. So they've been doing a fantastic job. What they do is they go in on a daily basis seeing how much they need to buy to stabilize the markets, and they've done well. We also have some other lines that we follow, and that's a line here and a line right here. These are called Fibonacci levels. This is a ceiling. So you can see we hit here and bounce off. We hit here, bounce off. We've kind of hit there and bounced off. And then we have a floor. And we've been hitting that floor and bouncing and hitting and bouncing and hitting and bouncing and so forth. So we're trending in here, which is awesome. There's not a big deviation in this. The difference in rates from here to here is probably 0.2 to 0.3%. So we haven't really been moving, as you'll see on my rate sheet at the end of the video. I'm going to go over where my rates are today. So that's the charts of what's going on today. So the next thing is we want to do is we want to market wrap. How did the day end? Stocks ended the day higher after some good COVID-19 vaccine news. Exactly what I was saying. On the economic front, really nothing came out today. There's no economic reports today. So what caused the stock market to go up so much and the bond market to ease back? The vaccine news. Okay, so that's that part of the equation. Like I said, I watch everything as well as the vaccine. So I'm staying ahead of the curve. But right now it seems like that's just taking over the news on everything else, because the markets, there's not much good news in the markets other than we might have a cure for this thing, and then once we do, I think next year we're going to blow the lid off of things in a good way. Economic calendar, we already went over there, and newsletter, I'll be posting this newsletter here shortly, and rates are slightly higher for the day. So now let's go over where rates are today. I used to post on my videos every day a whole slew of rates, but my video got to about 20 minutes long, and I know you guys don't want to sit here for 20 minutes. So the whole gist of the reason for all those rates is to show you that there is a number of different variables that affect your mortgage rate. And I'm going to go through that briefly here, but I want to show you what my rates are today. So I'm going to break this down on a conventional loan. I'm going to go over our conventional loans, our government-backed loans, and our jumbo rates. Okay, a conventional loan is just a normal mortgage. Okay, I'll reference to that. Then I have, you'll see here it says purchase or rate and term or cash out. Okay, what that means is there's variations. There's variations to the rate of your mortgage dependent on probably 12 or 15 different elements. Those elements break down as your credit score, what we call your loan to value, and I'll break these down here in a little bit. If you're looking to purchase a home, or you're looking to do what we call a rate and term, it means you're just taking your current balance and you're adjusting a new mortgage based off of that. Cash out, you're looking to pull out cash. Then there's also if the property is the kind of property it is. Is it single family? Is it a condo? Is it a 4-unit? Is it a PUD? Is it a manufactured home? All those variables go into what your final mortgage rate would be. So what I did on here is I just broke this down, and I wanted to make it quick and easy for you guys, just to give you kind of a benchmark on where rates are. So the top portion here, I went through a conventional loan. This rate is based on a $250,000 loan on a primary residency, meaning it's your home that you live in, and it's a single family home. Credit score is right here, and what we call your loan to value is right here. Credit score, what credit score do we use? Well, you believe it or not, you have about 32 to 36 different credit scores. You probably had no idea of that. But we pull a specific mortgage credit score through TransUnion, Equifax, and Experian. We use the middle score of what your scores come out to be. So if you have an 800, a 700, and a 740, we use the middle score numerically, so we would use the 740 score. We use the middle score, the lowest middle score of all borrowers combined. So if you had a co-borrower and their middle score was 700 and yours is 740, which uses 700. Not just me, everybody all over the country. That is the standard guidelines. Okay, so that's that breakdown. Cash out means you're looking to refinance your current mortgage balance plus pull out some cash. Buy a car, pay off credit cards, pay off student loans, do some things around the house. Okay, so then you have the rate and then the APR. If you're confused on APR, the best example or the best thing I could say on that, what to do, Google it. Google has fantastic explanations on what the APR, how to break it down. Okay, so in this case, if you have a 740 credit score at 80% loan to value, my rate today is 2.75 with an APR of 2.852. Now, for example, if your credit score is 700 at the same criteria, your rate might be 2.875, might be 2.9. If your score is 600, well, you need a 620 minimally. So if your score is a 620, this rate might be 3.75. Okay, because the lower your credit score, the higher risk of a borrower you are, means a higher rate that you're going to have to pay. Same thing is if you have a 4-unit building versus just a single family home. Rates are better on single family homes than they are on 4-unit buildings. So there is a whole slew there's a number of pieces of the puzzle that could affect your mortgage rate. Okay, so if you have something different than this, you might not even know your credit score. We can guide you through this. Basically, what I'm trying to do is just give you benchmarks on where rates are right now. If you're looking for a cash out 740 credit score at 75% loan to value, I forgot to explain what loan to value is. Very simple. The loan divided by the value, loan to value. So if your loan is $100,000, value is $200,000, your loan to value in that case would be 50%. Okay? So if you're looking to cash out, the rate's 2.875. Okay? So now let's get to the 15-year term. That also affects what your rate's going to be. 15-year on the purchaser rate and terms, 2.25. If you're looking to cash out on that, it's 2.5. Again, you can see 2.25 on a 15-year with the same criteria has a lower rate than a 30-year. Okay, so the term also affects what your rate is going to be. Now we go into my government programs. Those are FHA, VA, and USDA. Okay, I'm going to start at the bottom. USDA is for rural properties. We have a loan right now in California that is over $500,000, and it qualifies for a USDA program, rate at 2.5. Okay, so let's say you got that. We can go up to 100% financing. If you didn't go with this program, you'd go up to here for a conventional loan, 2.75. Now, for example, if that loan is because it's $600,000, it could possibly be a jumbo. Rates are 3. So this program will get you at 2.5, a 0.5% lower than other programs that we have. That's when you would go with this program. VA, you're a veteran that qualifies for VA benefit. You can go up to 100% financing if you're looking to purchase or refinance. And if you don't qualify for any of these and you're looking to buy a home, this is a great program right here, FHA. You might even have that, you might have heard about this program. You only need 3.5% of a down payment. All of our rates right now on all the government programs are 2.5%. Okay, 30-year fixed rates. Okay, no teasers, no nothing. Fantastic rates right here. Now we get into our jumbo program. This is what we're really known for. We do loans million plus. 740 credit score at 75% loan to value, 3% on a 30-year fixed rate, no points. I'll stress that, no points. All right, we have specific counties in California that we could go. The normal loan to value, as you see right here, is about 75, maybe 80% you can get away with. We have specific counties in California that we can go 95% up to $1 million. So 5% down, you can buy $1 million home with 5% down. You tell me where else you can get that. And the rate is fantastic. So those are my rates for today. So you like the rates, you like what I said. There's something in here that you're like, you know what can I do? Okay, I always ask people on a daily basis, one, if you've already applied for a loan with somebody, they've given you a loan estimate. We have to. You apply with us within 2-3 business days at the most. We have to issue a whole package of disclosures. A part of that package is what we call a loan estimate. It'll go over your rate, your fees, your loan amount, the whole ball of wax. If you're in the process right now, want a second opinion, email that to me. Email it to me, and I'll get right back with you. I'll mark all over it with a red pen and email it back to you with a little short video saying thank you for sending that to me, and I'll explain what I can do for you. So that's if you've already been pre-approved. You haven't been pre-approved. You want to look, hey, can I qualify to buy a house? Don't sit there and guess or assume I can't. Try it. You got nothing to lose. We're here. I got a whole staff of people that are just would love to help you. The worst case scenario, we come back and say, you know what, you can't qualify right now, but we'll explain to you why you couldn't qualify and how we could possibly get you to qualify. Is it credit? Is it income? Is it down payment? Is it a whole slew of things that you just don't know? Learn. That's the whole point of the channel. Okay, so that's that. So if you haven't applied yet and you're like, Dan, I really would like to see what you can do, here's what I always ask you to do. You can go to my website, and I'll show you that in a second, and apply. Or shoot me an email if you have a mortgage now. Send me a copy of your mortgage statement and say, Dan, here's my current mortgage. What can you do for me? Can you drop the rate? Can I skip a couple mortgage payments? Can you save me a little bit of money? I'm looking to combine my first and second. I want to pay off some credit card bills. What can you do for me? So the best way to reach out to us is this. Go to therateupdate.com. All right? You can call. We're here from about 8 in the morning till 6 at night Central Standard Time. You can leave a message afterwards, and somebody will get back with you. I promise you. The number is 844-775-LOAN. Otherwise, you can click here to apply right online, or you can get a free quote right here. Once you do one of these, somebody within the hour should be calling you. That's where we're set up on. I have a new system that if I'm not available, it gets assigned out to one of the loan officers. They get an alert and they need to call you within an hour. Okay, that's the setup. When I was saying, you know what? Email me whatever you have, the loan estimate you have, your current mortgage statement, anything that you have. The best way to do that is, my name is Dan Frio. My email is really simple. It's D for Dan, Frio, which is F-R-I-O, at preferredrate.com. That is it for today. I hope you like what you see. Other than that, all I got to ask you to do is please give me a thumbs up. Hit the subscribe button. Hit the bell so every time I do post a video, you get an alert. If it's a video you want to see, great, watch it. If it's a video you have no interest in, don't watch it. That's fine. But other than that, thank you so much for watching. God bless. Have a great night. I'll see you tomorrow. Bye-bye.